So let's calculate some free cash flows to firms of real world companies. Let's take my favorite company first. Let's take Apple. Here are the cash flows of the Apple for September 24, 2022. So we have to take operating profit here, but just for simplicity's sake, I'm taking net income. In later part, we will take operating profits. But right now, just to make you understand very quickly how to calculate free cash flows, we take net profit. This is the net profit, 98,803, that is 98, around $99 billion. Then we will add the non-cash expenses, including depreciation. So we take depreciation, amortization, we take share-based compensation, deferred income tax expense and others. All of those totals comes out to be $21 billion. So we add back $21 billion into the net profit of $99 billion. After that, we will deduct what? We will deduct the capex. That is, whatever reinvestment has been done by Apple during the year. So we find out in investing activities, these three are just savings, operating activities savings. So we ignore them because these are not actually being reinvested back into the business. So in investing activities, we take payments for acquisition of property, plant and equipment, and we take payments made in connection with business acquisitions. That is, this is the amount that is being reinvested in the capital activities of the business. We take both of these figures and we take the total capex of around $11 billion. So the net capex is actually positive, cash positive, because the non-cash expenses, including depreciation, is $21 billion and the amount which is reinvested back is only $11 billion. So net capex is actually a positive figure of $10 billion. Then we take the non-cash working capital. The non-cash working capital, how we calculate that? We take change in operating assets and liabilities. So what we do is a very simple exercise. We take all of these negative figures, we put negative sign, and all the positive figures, we put positive sign. And after all of these things, we get a net positive figure of non-cash working capital of around $1.2 billion. So after taking all of these figures, we find out that the net profit was $99 billion, but the free cash flow to firms was $111 billion. Now please mind that we have taken net profit just for simplicity's sake. In the next example, we will calculate the proper operating profit. Now look at this picture. Here we have Jim Cramer, the famous Jim Cramer, and we seeing that he is very upset. Why is he upset? Because he is the holder of, as we all know, Facebook shares or Meta shares. And we have a huge headline here. Meta shares plunge on weak Q4 forecast and earnings miss, right? So the CNBC is saying basically that Meta shares has plunged because there's a weak forecast, that is they will not earn as much money as in the previous quarters, and they have missed their earnings, that is this Q3 earnings, they have missed their profits which they should have earned. So let's see what is actually happening as compared to what the CNBC or Jim Cramer is saying. So let's look at the perspective of why share price have fallen in terms of cash flows. First of all, like I said, we have to calculate the operating profit after taxes. To do that, we first have to go to the consolidated statement of incomes of Meta platforms, and we see these are the income from operations. That is basically your operating incomes. So what we do is we put this operating incomes and we put them like this, operating profit. Then we will calculate the tax rate, which is based basically on the net profit. So what we do is a very simple exercise. We go back to the statement of income. We take provision for income taxes and we take the net income. So basically the government is charging on $5.5 billion around $1.1 billion. So just by dividing the net profit before tax and the tax, we get the tax rate, and the tax rate is 21.18%. So the operating profit was around $56 billion and the tax rate is around 21.18%. So the income tax based on this operating profits will be around $11 billion. And the operating profit after taxes is around $44 billion. Now the next thing we will do is we will take the cash flows. We have our operating profit after taxes. From the cash flows, we will first take not the net income this time, we will take the depreciation non-cash expenses. As we can see in all the quarters, these are the things we are looking for. So what we do is we take all of these expenses and we add them up, right? So the negative figure is being deducted and the positive figure is being added, since these are increasing our cash flow. So we can see in the 3 months ended, the depreciation non-cash expenses was around $4.7 billion. In the previous quarter, it was $3.5 billion. In the 9 months period, it's $13.6 billion. And in the previous 9 months period of 30th September, it was $12.4 billion. Next, we will take the net capex. So the amount of capex which the Meta has invested during this quarter. Now here we can see that again, there are certain things which relate to marketable, purchase of marketable debt securities, sale of marketable debt securities, maturities. These three things, like I said, are not actually the amount which is being reinvested in the business. These are not your capital expenditure. So out of these, we will ignore these and we will just focus on these three things. So here we can see immediately there's a huge amount of purchase of property and equipments. That is around $9.3 billion are being invested into capex. Any guesses what are these capex? These are basically your metaverse investments which Facebook have made during this quarter, right? And they have made some money by selling some plant and equipment of around $20 million. And they have made some acquisition of businesses, a small amount, and we get to the net capex of minus $4.6 billion. So effectively, Meta has reinvested its entire operating profits back into the business. And afterwards, finally, we take changes in non-cash working capital. How we do that? Very simple. We take changes in assets and liabilities. We take all of these items and we deduct them or add them as what is written in the cash flow statement, and we get changes in non-cash capital, a positive non-cash capital, $567 million. The free cash flow to firms for Meta for 30th September 2022 is $371 million. But see what happened. What was the previous quarter like? What was the previous quarter in the last year? That is, quarter ended 30th September 2021. The operating profit was huge. It was almost double the operating profit of 30th September 2022. It was around $10 billion, and operating profit after taxes, which is calculated as per the profit rate of Meta in the previous quarter, it's around 12.98%. So the EBIT 1 minus tax, that is operating profit after tax, is $9.07 billion. Then we add back all the depreciation on cash expenses, that was around $3.5 billion. And they had made again some capex, that was only $4.3 billion. So here you can see the major change. The profits have reduced significantly, almost half. And the capex have almost more than double. So what do you think is going to happen to cash flows? See, the cash flows in 30th September 22 was $4.6 billion, whereas in 21, it is only $869 million. And this is where you can see what is actually happening in Facebook. The profits are down. They are right. The profits have been reduced almost half. But what has actually happened is that the cash flows have reduced by more than 90%. And this is the thing which no one is talking about. See, everyone is focused just on the profits. They are talking how the quarter by quarter, year by year, the profits are reduced by 52%. But why is no one talking about the fall in cash flows? This is what you should actually focus on. The fall in cash flows is more than 96%. This is because it shows that the investment which the Meta is making in Metaverse is maybe not working as per the market expectations. Because the investments has resulted, the huge investments in Metaverse has resulted in huge decrease in cash flows, as well as the fall in profit has also resulted in this decrease in cash flows. So just by looking at the net profit, you're looking at half the picture. If you want to look at the whole picture, you must understand the fall in cash flows. And let's just finish the 30th September, the whole 9 months period. As we can see, the operating profit, it has reduced, like in 30th September also in 3 months period, it has also reduced in 9 months period. The operating profit in 9 months period was $18 billion. In the last year, it was very high, it was $28 billion. And the net capex, as we said before, it was minus $9.7 billion because the huge amount of plant and equipment made in these 9 months, that is $22 billion. And in 30th September, it was $13 billion. Changes in non-cash working capital. In fact, in this period, Facebook has a positive net cash working capital, non-cash working capital, As compared to last period, it was negative. But since the other amounts are so huge, this amount, this difference is not actually being shown. This difference is not actually affecting the cash flows. So the cash flows in on 9 months period has reduced almost half. So this is how you should look at the cash flows of the company to understand what is actually happening in the company.